All right, so in this video, I want to share with you some insight on making $950 a week trading SPX weekly options. So in order for us to kind of cover this concept, you do need to understand some basics behind options. But my goal here is to give you a bird's eye view and a bigger perspective. You might not know all the intricacies of how to really do this. You might not know everything about it, but my goal here is just to give you a little insight on, as you progress with options, how this might work and how this might evolve for you. All right, so before we get started, remember that short duration trading and short duration options, it involves more price risk. I've seen a lot of different accounts, and I work with people with coaching and mentoring and working with people one-on-one. You can learn more about that on our tradersfly.com website. And I've seen 0 DTE to 5 DTE, 10 DTE, all these shorter duration options. I've seen some accounts grow really quickly from maybe $30,000 to $150,000, but I've also seen them collapse pretty quickly as well because, well, there's more price risk and people are trading those higher accounts in the same way. And just understand that you want to trade them a little bit different the larger the account goes, because it's different. It's kind of like, operating a Titanic boat versus a canoe. They're completely different. So when we go into here, this concept and overview of looking to make this income, what we're really doing is we're looking to set up vertical spreads. And that's what we're going to go in right now. Is we will go into the SPX options, and I'm going to do it with the basics of this SPX. So I'll go to about a 12 or 13 delta for the moment, and kind of build out this spread. And I've got this vertical set up right here in this case on the put side. And then what we will do is we will do the same thing on the call side. Now I'm splitting them up just so I can manipulate them a little bit easier for you or with you at some point here in the future right now. And that'll just give me some more flexibility. So now I've got this setup, and this setup is really an iron condor, and we're doing about 10 days out. Because you might say, well, if you're trying to do it a week, why are you doing 10 days out? Well, the reason we're doing it 10 days out is we usually don't want to take these all the way to expiration, because if you do the 0 days or you do some of these super short duration options, what happens is there's quite a bit of a price risk problem. So instead, what we can do is we can go to the 10-day, 13-day, and drive those down to about a 6 or 5 day option, maybe even a 7 or 8, depending on how things move. And then you just get out of those positions a lot sooner or earlier. So this is where you can get a little bit more creative on what duration you want to go with, but doing 0 DTE, not to say that, hey, I haven't done it before, or, because I make a bunch of videos on it as well, but just understand you don't want to put all of your money into these positions. So now that we've got this iron condor set up, doing about 4 contracts, let's go about 5, will get us to that 950 per week or so. So if you can see there, the max profit potential, it's about 950. So doing about 5 contracts on each side gives us 950 of credit. Now that is if we take it to expiration. And again, we normally don't. So it probably will need 1 extra contract there. And that's how you would maybe now get $1,100. Now, if you also include weeks with drawdowns, and we're thinking a little bit more monthly, well, in this case, what you might want to do is start looking at maybe 8 or 9 contracts, because now you're aiming for about $1,400 with some weeks with some losses. In that case, maybe that's when you might get into a 950 on average for those profits or positions. So just understand it's all relative depending on how you're looking at things. Is it just trying to hit 950 a week? Or is it 950 a week over the course of 1 month or 12 months? Well, in that case, you might need to shoot for something around 1,500 or so, depending on your risk or money management. But this is what we do. We would go in and set up a construction like this. We have verticals on the bottom side and verticals on the top side. So we got calls and puts. And what happens is we get about 158 theta, which is time decay, that we're making. The white line is today. The green line is at expiration. So with time, that white line will get closer and closer to our expiration. And even if we go a little outside that range, because the stock's not going to stand still, or in this case, the index, we go over here. Well, you could go in, and now this is where you collect your about $970. Or if you go down a bit, here you're collecting about 734. on 8 contracts. But if you go a little bit further, like an extra day, that's where you can get about that 950 or so. So again, it really just depends on how you're structuring, managing those trades. You could even pull off some of the profits early or ahead of time and put on some new condors. But this is a general basic concept to starting to sell premium on a week-to-week basis. So that way you can go ahead and collect a either weekly or monthly income. You can do this depending on how much time you have, how proficient you are, and management. But that, of course, is a lot of also work to go forward and learn more about. So check out some of our free webinars there at tradingwebinars.co, where you can learn a lot more info about different kinds of strategies, about options, and continue to learn and evolve more about options. Because again, this is just a bird's eye view. And even though you've got a bird's eye view or a big picture concept, it doesn't mean that you're going to learn all the nuances to managing this strategy until you really get your hands dirty, learn about it, study it, understand it, and work through it and do some practice. So thanks for joining me. Truly appreciate it. And I will see you in the next video.